Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, May 12th, 2022. This one will be relatively quick. I know you guys are probably tired of hearing my voice today. This is video number 3, but it's the last you'll hear of me for over a week. As I mentioned, I'll be flying out early tomorrow on vacation, limited computer access. I'll get post out to you with some static charts when I can, but I don't think I'll be doing any video recordings. We'll see. But let me just tell you where we close the day, and what this video will be a little different. I'm just going to kind of give you what I'm doing as I leave town, since I can't be in front of the computer tomorrow, at least for the better part of the morning. I'll be on a plane, maybe have some Wi-Fi connections there, and be able to do a little trading because it's a long flight to Hawaii, especially with a layover in Denver. So it'll be traveling all day. But here's the takeaway: is I'm going to use OCO orders. I'm going to stay in the game. In the old days, at times, even when the market's not moving, there's not a lot of opportunity. I just close out, go flat. Don't worry about it. That's what vacation's all about. That's the life of a trader. You don't have to work today every day, and you certainly can't extract money from the market every day. It's not a ATM that just you continually extract cash. You got to hit it when the getting's good, and the getting's been very good lately. Volatility is high, and that is when traders make money. You can make more money in a day or a week than you can make in a month or many months in choppy, low volatility, or sideways, dull markets or untradeable markets. Okay, so here's what's going on. The Qs closed still below T2 on the weekly chart, so they have up until tomorrow to rally and close on or around 298 to 300 to park it on that level. Anything, that in itself would be a little feat, because we've already broken that. And remember, the way things work is support once broken. That's not a line tool, that's a squiggly line tool. Once you break support, shorts tend to pile in, longs have stops cleared out, and we won't know where the near-term bottom. By the way, I'm only looking for a tradable rally. I still believe at best we go up, maybe hit the 200 days, go down, and maybe we go down first. I covered that. Check my other videos. I'm not going to do the whole long thing right now. I'm just going to tell you, again, give you an idea of strategy on how to trade and use OCO orders, especially for those of you that can't afford to be in front of the computer all day, but like to somewhat actively trade. And it's good for swing and trend positions as well. So we'll see what happens there. The potentials there. I'm going to get down to the short-term charts in a second. Let me just show you where SPY closed today. You know what? I'm actually okay. We're about where we closed. I may be showing after hour trades on here. These candles may be moving, but we're about where we closed, so it doesn't matter. SPY just marginally below T2. Remember, that's support around 394.56. But the ones that I like the best, or the index I like the best, I mentioned earlier, small caps. So I'm overweighted there, and I also reversed my NQs, as I mentioned, reversed everything, net long, and then MDY, or mid caps. So you have the small caps that so far have snapped back and parked back above the key support, my second target, 171. So I was able to close out some nice swing and trend shorts there. Reverse long, same thing with MDY, give you that T1 back a while back, and that low was low of the day, 424.27 versus 425.13. So almost a perfect tag of that target. So there's two indexes, given they're not the large caps. Large caps are really the big dogs of the market. They make up a lot as far as the stock market capitalization go. You can add up the mid and the smalls together, and they're still dwarfed by the large caps. But it shows you buyers will step in. These are support levels. There's a good chance. Or we just break down and melt down. I already covered that scenario. So now let's talk about more of a short-term, how I'm trading this. So today we held the lows. This is that 10-minute chart I've been focused on lately, and there was that previous spike low we ripped up in the morning. I already covered this. We went up to that pretty big near-term level. Again, when you're down on the 10-minute charts, this is, you're getting a little granular here. The world of the day trader or the active swing trader got rejected off 12,100 on NQ. Nasdaq 100 futures went down, made another successful test of the lows right there, and we kept the divergences intact. So I like what I see from this perspective. Now, it's been a story of the market just going down, having these divergent lows, giving us some tradable rallies. And again, day trader will take that all day long. When that breakout is a 2% rally, remember this was all posted the other day. Then we reversed from there, 3% drop. And then we had another pullback, 1.6%. So you can actively trade this. I don't have to tell you how much even a single percentage point puts in your pocket if you're trading even just one contract to NQ. Multiple contracts, you're doing good if you can get even a good part of those. All right, so where are we at now? There's a little level here as I'm just eyeballing this. That wasn't what I meant to do, but I can't help myself when I see levels that kind of stand out. Again, let's zoom in tight and I'll show you why I put that there. You can see right here, reaction low right there, and a reaction from below, and we're just kind of parked there right now. It's not a major level, but let me tell you what I did. So you know my thoughts. You know I reverse long. I'm not going to get married to it. I've got some, nice embedded booked profits now, and even some nice gains from today. I told you I reversed shortly before the open here, and then again, or shortly before the open, then right after the open. Pretty much got the lows today, and went up nice, went down. Even that a short pullback trade on part of the position there, closed everything out, got back in, scaled back in, and it's been a bottom line good day. So I'm going home short, and here's what I did. I staggered, and this is just for the NQs. I have similar things. I've got to sit down actually and get all my numbers, but I just entered all my orders. I have broke it down into 3 lots on my NQ position. And so what I'm doing is I have roughly a third. Let me look at my monitor here. I've got about a third to go off. Stop loss orders first. And let's see, so good to always make them good to cancel. And not all brokers allow this. Interactive brokers, you can hide your orders. I always hide my stops. Now look, they're not going to come after me. A few contracts NQ on each order. They're not going to try to move the market for that. NQ is too big of a security. It's the Nasdaq 100 futures. You trade a small, thinly traded stock or ETF. They can easily come see that order and come down and try to get it. The market makers, and that all goes. All right, so we've got about 11,141.50, 11,141.50. Right there, and then all the way up 1117 739.50, wherever that is, somewhere out there, 11,739.50, no, a little lower, and then the highest one 11,781.75. So that would be about right there. Okay, so they're staggered, the lowest one being 11 no. Okay, no, I'm sorry, 141.50, well, quite a bit down here. So that's it. So my thought process, I don't want to see that we already double tested these lows today. We've got nice divergences in place. Ideally, that needs a stick to pan out if we're going to get a reversal and recovery at these levels. So I'll give it, just minimal profits on about a third there. The other is, I think that is, I'm trying to look at the lines. I wish they would show on here. I think you can do that. I don't use that whole chart trader thing. So either way, a scale out, a third, a third, a third. If they take out the lows, the lowest stop is 141.50, and that's it. And no problem. Then I'll be out and I'll be flat, and I'll land and say, okay, well, I gave back some, some profits, maybe all of today's profits, but certainly, got plenty to. That's just trading. You're gonna do that. And then on the flip side, those orders are attached, each one to an OCO. They're OCO orders. That means one cancels the other. They're good to cancel. You always got to remember, don't forget, don't mark them a day order. It expires the end of the day. If you want to set it, forget it. There's no reason not to do. I just try to always get in the habit. Unless I'm day trading, I'll just keep that order good to cancel. If it gets hit that day, it's the same as a day order anyways. Otherwise, it'll stay on there until you cancel the order or change it. All right, so on the upside, we've got staggered. Let me show you where I think we might go if this plays out. Right about, I have it on right here. Well, 60-minute chart. I'm sorry, I'm living in the 10-minute chart here. Let me go to the 60-minute chart, and I will show you that. Okay, this is what the 60-minute chart looks like, and this is my one of my, if not my favorite swing trading time frame. So let me show you what I see there. I see a bullish falling wedge. Not the first that we've had recently, but again, I'm talking about this. One of these 60-minute divergent lows is often the one that marks a big tradable bottom, or even the bottom in certain corrections. That's where a lot of major bottoms come from, just like major tops too. And so the divergences have built. They've continued to build. That's where they really started back here. And each one, again, has been for a little pop so far. And hey, even a little pop is, can be measured 6, 7, 8, 10%. So here's where we're at. Let me just kind of recap it. Downtrend line, which was taken out today, that gives us this little wedge right here, and the divergence from this point that I'm highlighting right there, the most recent divergence, big pop up. This is that same resistance roughly on that 10-minute chart I just showed you. I have it here on the 60 minutes, shows at 12,085.50-ish right there. So we ran up, popped it today. It was these reaction lows. Here, I'm going to zoom in for you. I know sometimes, and you know what I'm going to do, guys? I'm going to screenshot this and put it in a video. Take a screenshot, that is, and put it under the video so you have it. So those were a couple reaction lows that were distinct reaction lows lately. We broke that level right here. We back tested from below. We back tested again. So now that's the level that needs to get taken out. If they pop that, that should bring in some buying. And so I've marked for you very clearly my targets. And so what I have, I have on the downside three staggered stops. They go below there, not too far. One is right around the lows, I think even a hair above, because I don't even think we'll visit it. And then one gives it a little more room for a little punch down tomorrow and a move up. If that happens, I'll be stopped out of 2/3, but maybe that last third will stay in there and we'll run up. And then here's my targets. So now I have those orders. Each of those are attached to a sell limit order. I don't hide those. I want those hit. I want, again, it's more mood and NQ, unless you're a whale and you're trading, 100 contracts or more, you're the big contract. I don't know. They're not going to come after, a couple small contracts. T1 right here, it is at 12. I'll move this line in a second here. 527.50, and you can see that's a pretty nice resistance. I expect a reaction there. Possibility if we get a big short covering rally, a short squeeze, which believe me, this market is a powder keg waiting for that to happen, then we could blast on through there. But with that being said, if I was here in front of my desk, what I'd probably do is reverse my entire position there, or if we get close to it, set a stop and watch it, a tight trailing stop. So if we bounce back, then it'll reverse me into shorts. But I'm probably be flying tomorrow. If we hit that, and it'll probably be tomorrow before the close. And that, just so you know, that's going to be, if hit, that's a pop of about almost 5%. Yeah, right at about 5% from where we are right now, where we closed the day, not even from the lows. So I'll be better than on the shares I reversed into, probably average about better than a 6% profit if hit. So that's going to strip out about a third of my shares. T2, and again, my orders are set slightly below there because if all eyes are looking at that, I'm not going to try to milk out the last third of a percent. I want to sell a little shy in case the sellers step in early. Same thing with the second target at 12,707, and then my final target, and I'm going to show you QQQ traders in a second. This aligns with my final target, T3 zone. Really, this would be where I think we will go if everything works perfect. But remember, there's going to be a lot of eyes on that level if we get up there. Let me just pull it back out. And I'm going to tell you right now on NQ, that yellow line, it was yellow color coded before because it was an important level back then. It still is. 12,973, call that. And then I have also a little minor support below it at 12,870, almost 877. So that's my third and final target zone for this bounce. So there it is. That would give us from where we closed today, in which we're still trading, about almost a 9% rally. A little, the bottom of it be about 8.5, top of it right at about 9%. So that's the potential. Again, we can crap out, and everything I've just done is moot. But hey, you miss 100% of the shots never taken. So I'm going to take this shot right now, and worst case scenario tomorrow, I get stopped out of all my longs, and then I'm flat. I'm flat the indexes. Same thing will happen with my Russell 2000 RTY shorts. Amazon, I'm going to give a little room because I took a starter position in that today, and room to add to that. Okay, there it is, and I'm going to show you now QQQ. Oh, as I was pulling up the chart for QQQ, I forgot to mention, no, my last lot, remember these OCO orders are tied, but on that last and final one, in case I'm not around to be there, I have it entered to sell more shares, and I'll be long at that point. So I'll be at the remaining 0.3 or 4 long, and then I'm reversing to be was it one or two? I'll be 2 short by then, and so a small short position, because I do believe that at the very least this is going to be formidable resistance up there. If that T3 zone hit, could be the end. Again, I'm getting ahead of myself here. We haven't even had a rally yet, but that could be the end point, and at that point I'll probably come back down here again. I would love to be in front of the computer this week or next week, because there's just so many levels and so much volatility now. And even if we go down and I get stopped out tomorrow, there's some nice supports just below, and sooner or later we're going to have an explosive short covering rally. But you can tell I'm not happy that I won't be in front of the computer for that. Anywho, let's go to QQQ, and I'll wrap this up. And hopefully the takeaway is, how to trade, whether you're going on vacation or not. A lot of you work, or maybe you're retired, you just don't want to sit in front of a computer screen all day like me. You have QQQ 60-minute chart. I've already coded daily. There's the divergence has been building all the way from that point. And then more recently, I know this chart looks like a Christmas tree because I have a lot of colors. More recently, you have this downtrend line. So there it is, downtrend line. Little divergence. If you want to just look at this most recent divergence, that's comparable to the wedge I gave you on the 60-minute chart at NQ, and so we got to pop that now. So you can see my target right here. I didn't list the targets here, but here, let me just add them for you. It's easy enough, and they may or may not align. I'll have to double check this, but you can see resistance here at about 305. First resistance we're going to come up to, if we just have a small bounce and you think there's more downside and you want to short, be about 296. Then 305.40, and then 311.25 roughly, and then the final target right now, max bounce target at this point in time. That could change. We could run up to the 200 days. We'll see what happens, but 318, that's a big number. It was a big number for me before. Why is that? No, because we had these 2 big major reaction lows, really almost a third there, a fourth there. We danced on it. Whipsaw signal. This was the pre-Fed stuff I talked about. Remember, that was the D-Day, kind of the D-Day line right there, and then we broke it, and bears won D-Day, and they took it, and they were able to take the market down another 10%. Now, so that's it. That battle was won, and you can either declare victory and cash out, or hold out, and maybe there's more, or boom, pop that line, and I think that's a potential bounce target. Let me show it to you on another time frame, or another view of it. This is the same chart, 60-minute chart of QQQ, and what I have up here, these yellow and blue lines, are the Fibonacci retracement levels. This is the all-time high in Nasdaq 100 back in November, measured down to the recent lows, and this is the last major reaction high right here before this last leg down, also measured down to the lows. So that gives you the blue line and the yellow line, and what you look for in Fibonacci levels, if you're not familiar with them, look them up, read about it. Stockcharts.com has a great description in their chart school. This was, and even before I put up the fibs, my bounce target right here. There's those 2 recent lows, right? And D-Day level. And again, that's that, measure it up here, about 9%. No, it's showing here about 11%. So there's that 9% mark. Okay, because the stock futures show levels you don't see here. So if the and that was also from today's lows I grabbed. I'm sorry, from where we closed today, that is there. There you are, right at the 9% number. Okay, so it's about 11% if you bought the lows today. Okay, so it's price resistance. I already went over that on the last chart, but and this never ever fails to amaze me. When I first come up with I always do my support and resistance levels first on price and trend lines, then I'll put up the fibs, and what you have here is a fib cluster. So from the blue line, and this was probably the more significant, or as significant I should say, you hit perfectly. I have to remove the line. Here's my line at the level right there, those two lows. I know it's hard to see in the video. I'll zoom in a little tighter here, but the Fibonacci levels on this charting pro, I can't make them any bigger. It's 38.2 right here. That's the this blue line right here, and again, that is right where my price resistance is and that target. So I like it all the better when my price targets line up with fibs, and they often do. There are a lot of traders out there that trade exclusively using Fibonacci levels. So and then you have also from the whole entire move down, you're at the 23.6 fib is a little shy. And remember, I'm taking partial. Yeah, it'll be my final target. Will be just below there. Again, we might hit that, but I'd rather get out early than try to milk the last bit and reverse short. So that's it. So I'm going to be scaling out a third if it plays out, or I'll be stopping out a third. And again, if using these OCOs, if my first stops hit, then I have 2/3 the position. If the next one never gets hit, that'll ride up to here. When that order gets, if those first lot, that third, or roughly a third, is canceled, if that order's filled, I mean, it's going to then automatically remove one of these orders. I have to check which one. Doesn't matter really. You can do it any way you want. And that's it. So if the whole thing goes up, then all my shares will be sold here, and thirds, and those orders will be canceled one at a time. Of course, if I'm on the plane, it starts to play out, I'm going to raise my stops. There's no reason if we get all the way up here to give back that much in profits. So that's how it works. And you don't always have to have increments of a third, or a quarter. You can have a single position. And again, I just really like those OCO orders because they allow you that freedom to get away from your computer. And I'll tell you another big benefit to me, probably bigger for most people. I've been doing this long enough, but everyone, I don't care how long you do it, sometimes people, and some more than others, struggle with discipline. You have a great trading plan. You get into a trade, and it starts to move against you, and you second guess your plan. How many times have you done that? And you pull out, even though you haven't hit your stop, but you cash out, and then the darn thing turns around and hits your target. Or, and it's probably a lot of you can empathize with this, or you said this has probably happened to you. You get into trade, you're targeting, let's say you got in today's lows, and you agree that we might bounce and head up there and run up about 11% off today's lows on a counter trend rally, but you get halfway there and you see the big gains in your account, and maybe you coming off a string of losses, so you just want to book that gain, and then you leave a lot of money on the table. So what OCO orders do is give you that discipline. You put them in, set it and forget it, and unless something changes, I always say have a trading plan. That's rule number one in trading and investing. And for the most part, leave it alone unless you happen to see something that convinces you to change. Just like I did today. I pivoted at the lows, and hey, I may be wrong. I may have left money on the table on the short side, but some things came up after studying the charts last night and this morning. And when I saw Amazon and all those other sectors and indexes hitting support, that coupled with some other things, I said, you know what, that may be it for now. We may get a good bounce here and then reload on the shorts at a higher level. All right, guys, I'm going to wrap it up here. And next time I talk to you, get something out to you by post, will probably be late tomorrow night. This has been Randy Finney with Right Side of the Chart. Have a great day or a great week.